The coronavirus pandemic has shut down restaurants all over North America, causing the industry to be in full-on crisis mode with rock-bottom stock prices, making it the perfect time to invest. What's up guys, my name is Adrian and welcome to my channel on passive income investing. In this video, I'll go over 5 restaurant franchise stocks that are ripe for the picking and perfect for patient passive income investors. So consumer discretionary or consumer non-essential stocks, especially restaurants, have tanked because of the COVID-19 pandemic. Many have temporarily suspended or reduced their dividends because a lot of their restaurants have shut down. So stock prices are really at an all-time low, providing a great investment opportunity here. Most of the companies are royalty type investment trusts. So the main purpose is actually to provide a monthly dividend, which is why I really like them. This is perfect for patient investors who are willing to wait to start receiving their dividends. It's really a matter of time when the government lifts the bans and allows the restaurants to reopen. It could take a few months after that, but it's pretty much a matter of months. And getting in at these low prices can mean a really big dividend yield that you lock in for future dividends. So it's a great investment opportunity. Let's check out the 5 stocks. Alright, so the first stock I want to review is ANW. The stock symbol is AW.UN. So this company, everyone knows it. It's famous for its root beer. It was founded in 1923, so very old. Currently has approximately 1,200 locations. Their current market cap is 372 million right now. They suspended their dividend completely because of the COVID-19. A lot of the restaurants had to be shut down. I would say this is the safest out of the 5 stocks I'm gonna be reviewing because the dividend's a bit lower, which just means it's more sustainable, and it's the biggest. This company has the biggest market cap. So right now it's actually trading at a 45% discount compared to its 52-week high price. So its 52-week high price is $47.65, giving a dividend yield of 4%. And as of April 16th, the price fell to $26.10, giving a dividend yield of 7.32, so almost double. So if you invest in it right now, you will be locking in a dividend yield of over 7% for a really safe company. So a really good deal here. All right, so the second stock I want to review is Pizza Pizza. It was founded in 1967. They have a lot of locations, 772 approximately. Their current market cap is 209 million, so pretty high. They actually reduced their dividend by 30%. They didn't suspend it, so they reduced it from 86 cents to 60 cents. They say it's temporary because of the COVID-19, and they did that on April 15th. This is the first dividend reduction in its entire history. So if you would buy it actually right now, you would lock in a dividend yield of 7.28%, even with the reduction. So that's really, really good. What I like about these guys is a good portion of their revenues comes from takeout and delivery, which is still ongoing right now. And technically, this is a corporation. It's not an investment trust. That's why there's no .UN after the stock ticker. But it has always provided really good monthly dividends to its shareholders. So this is trading at a 23% discount compared to its 52-week high, which is $10.62, giving a dividend yield of 8.1%. So the price right now is $8.24, and let's say they put their dividend back to normal, back at 86 cents. The yield you would lock in right now is at 10.43%. So over 10% yield is really, really good, guys. But either way, you're getting a dividend yield of 7.28% right now because they reduced it. So if ever they bring it back to normal, you're locking in a really, really high dividend of over 10% for a pretty reliable company here that has a lot of locations. So a great deal. All right, so the next stock is the CAG, stock symbol CAG.UN. So they were founded in 1971, a bit newer, and they have approximately 105 locations. Their current market cap is 102 million. So they reduced their dividend by quite a bit, by 63%, temporarily on April the 13th. So the current dividend yield, if you would buy it right now, is only 4.59%, which is decent. They actually closed all their restaurants as of March 16th. What I like about this fund is it consistently raises their dividend in normal circumstances, but keep in mind this is really a dine-in restaurant. It's a higher end steakhouse, so they don't have much revenue right now from delivery and takeout. So right now it's trading close to a 50% discount if you compare it to its 52-week high price of $17.75. And at that price, it was giving a really good dividend of 6.42%. But right now it's trading at $9.16, so pretty much half. And if the dividend is going to go back to normal, which I'm pretty confident that it will, and if you buy it right now, you will be locking in at over 12% dividend yield, which is really, really good. So what's cool about this one is if you buy now, you'll get a dividend anyway. Yeah, it's less than 5%, but when it returns to normal, which I'm pretty confident that it will, you'll lock in a dividend yield of over 12%, which is great. All right, so the second last one, and this is where the big dividend yields, the potential starts to come in here, is Boston Pizza. So symbol is BPF.UN. So they've been founded, they were founded in 1965. They have about 395 locations. They have most of them in Canada, but some in the US and Mexico. The current market cap is 147 million. So they suspended their dividend completely because of COVID-19. They did that on March 23rd. They also laid off half of its corporate staff on March 27th. So these guys are known more, they do takeout and delivery, but they're more known for dine-in. So they've been hit pretty hard. So they're still generating some revenue, like I said, with takeout, but since they're more known for dine-in, they're really taking a beating right now. They actually recently reduced their annual dividend 2 months or a month before the pandemic hit by 11%, so pretty small. So this is kind of like a double whammy for them. So right now it's trading at a 64% discount compared to their 52-week high price of $18.17. So at that price, it was giving a dividend yield of 6.74. But right now the stock price is $6.58. So if you would buy it now, and if they would re-enable their dividend, you would lock in a dividend yield of 18.6%, which is astronomical, guys. This is really high. So not for the faint of heart, a little bit riskier than the other ones, but definitely the one with the most potential here. So the last stock I want to review is SIR Royalty. So this is by far the riskiest stock out of the 5, but the one with the most potential. So the stock symbol is SRW.UN. So SIR, or Service Inspired Restaurants, was founded in 2004, so a lot newer than the other ones. They have about 60 restaurants. So Jack Astor's Bar and Grill is their flagship restaurants, but they have about 7 brands in total. The current market cap is very low right now. It's 24 million. They suspended their dividend completely because of COVID-19 on March 23rd. And these guys already had reduced their dividend by 17% in November of 2019. So this is by far the riskiest stock out of the 5. They're a newer company with less money on the books. But the biggest potential for reward here, because as you can see, it's trading at an 82% discount compared to its 52-week high price of $16.92. At that price, it was giving a good dividend of 6.2%. But right now the stock price is $2.98, which means that if you buy the stock right now at this price and they re-enable the dividend back to a normal level of $1.05, which is very possible, because don't forget they had already reduced it, you would be locking in a great yield of 35%, which is huge, which basically means if you invest, let's say $5,000 in it today right now, and the dividend goes back to normal, in less than 3 years you would already make back the $5,000 in dividends, which is just crazy. So not for the faint of heart here, guys, but definitely the stock with the biggest risk but the most potential. So that's the end of the video, guys. Thanks so much for watching. I really appreciate it. Please hit the like and subscribe button if you haven't already done so. And don't forget, you can download the presentation for free by clicking on the link in the comment section. Also, don't forget, I put the links to each website of the company. So if you want to read up more on each stock, just click on the stock symbol, which will bring you to the investor section of the website. So let's not forget what Warren Buffett says: we need to be greedy when others are fearful. This is the perfect time for these restaurant stocks, a really good time to pick them up if you're a patient investor like I am. So take care, guys, and see you next time.